Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, February the 20th, the year's 2024. Let's talk trading, taking pips. These videos are for educational purposes only. Your results may differ from mine. And as always, make sure your risk management is in place. Never lose more than you're willing to lose on any one particular trade. And in fact, that's part of the essence of taking pips, because if you're willing to lose a certain amount, that amount should probably be something that you can gain back in, 1, 2, or 3 trades, as opposed to something that might take you days or weeks, a dozen trades or more to make up. So let's just take a look, see what's going on here on the week. Okay, so for the pound, we can see we're at 126.54. What that tells me is we went through the launch pad, which is that 40 level. And the thing about the 40 level is it's 10 pips away from the 50 level. 50 level is psychological. Well, if you really think about it, at the 50 level, probably on either side, there's going to be some stops. And so if it hits 40, it's probably going to go to 50 just because. And then if it hits 50, it'll probably go to 60 to take out stops. And then it might come back the other way and do the same. And then it might just continue. We don't really know, but that's just, a story I like to tell myself about why that 40 seems to be the launch pad, but it works. It just seems to work. So, does it work all the time? No, but it works enough of the time that I can take pips when I use it. And you can see here on the daily, we broke out of the Monday, which is the opening range for the week. You can see we're about 28 pips above that level, and we're climbing right now. We passed the yearly midpoint. We went across the opening range for the low of the opening range for the year and for the month. So we're in all those opening ranges right now, or at least for the year and the month. You can see we're about 21 pips below that monthly open. And once again, if you're really having trouble taking pips, then perhaps you might want to really look at trading either H4 or trading looking at the H4 chart or trading looking at the daily chart and just going with the candle color. And then the thing about that is, what the ATR, the average trading range is, or the average range is. So if price hasn't expanded, it probably will. And I couldn't have planned it any better. I said if it hits the 50, it'll probably hit the 60, and there we go. So once again, it's not hard to take the pips, but what happens is indecisions at the entry and indecisions at the exit. Yeah, I think we may have done a video about indecision, but that's the big impediment that's standing between you and the pips that you want to take. And we always talk about looking left. Well, if you look left here, what happened? Price got pushed down the last time. Look here, pushed down. You can see here. But then from this level right here, price is pushed up. 1, 2, 3, 4, 5, actually 6 times, pretty significantly. So what do? You can either, so you could have taken the 40 trade, you could take that 50 psychological trade, you could have taken the going across that midpoint, and then you put your stop loss in. It could either be, you know, if you're always using the same lot size, then it's the same distance. Now, is it 10 pips? Is it 20? But think about something. If you're at the 50 going long, does it make sense to have anything less than a 10 pip stop? I want you to think about that. Does it make any sense to have less than a 10 pip stop? Something you have to determine. There's a couple of ways to look at it. You know they're probably going to sweep that 10 pips. It's a good chance. So the question is, if you're going long and you think they're going to sweep it, come back down, then maybe you don't go long at the 50. Maybe you wait for it to come back down in the 40s. See that, the up movement, the down movement, and then up again. Maybe we can look at a different chart to see what happened. Let's see. Do I have a sweet spot? Yeah, here we have a sweet spot chart. Though actually the setup that Walmart likes to use. So here's the 40. So you can see here we've already come up. Then we hit the 50. It went up a few pips, came back down, and came back and hit it a second time. Now, and then it took off. And that's at the M1. So let's see what it was doing at the M30. Well, here at the 40 line, you can see it hit the 45. Could have taken a quick 5 pips. Price came back down and then reversed back up. Turned this M30 green at 42, which was also the open of the H4 candle. And we know what happens with H4 candles. They like to run. And you can see here at the 50, it was green. So, you know, taking these pips, it's not that difficult. And one of the things I've been looking at at candles, you can see here, this candle closed below the high of this candle. So for me, that shows a little reversal, and it did reversed about 8 pips, and then it came back, broke out. So I wouldn't have traded long first. I might, if anything, I'd be looking for a little reversal, because you got these 2 big candles here, and then you can see it came down just below 35, then started to go the other way. And if you look at the 1 minute chart, you can see exactly what happened here. So from the get-go, it went down, which once again, it closed below that previous high. So bias for the short term would be down. Now the thing about it is, you had 1, 2, 3, 4 bear candles in a row. Then all of a sudden you got the big one, 5, 6, 7. Well, if you've watched, you know, my video about candle colors in a row, you know you're pushing your luck, because we start looking for buzzard reversals after 3, especially on H1 So 1, 2, 3, look for a reversal. Here, let's see. H1, that's Asian session. See at 1, 2, 1, 2, 1, 2, 3. So let's start to look for that reversal. One thing though, let's just take a quick look here. Oh, he's got that fixed. Okay. We take a quick look at the daily. Okay, we've got 84 pips, 48 percentile. So price could make a run, could go up higher. But, we can see here, price has been struggling to make any big moves. So once again, looking for that reversal and the taking of the pips. And so, on the entry side, to take the pips, you just have to have a method and stick to it. Your method, if you've been following me, if using one of mine, they're statistically based for the most part, based on, out of the last 100 or 1,000 bars, how many times was that trade trigger worth 2 pips, 3 pips, 4 pips when I use the frequency distributions. Oh, in fact, somebody asked me about the wick zone and equities. The thing is, I haven't run the wick zone equities, so I don't know which equities it would work best on. Because you see, the question is, it's not does it work, you find out which ones it works best with. So any method, if you're going to run statistics, you run it on, you have to determine which ones it works best on. So for example, certain stocks are better at the buy zone than other stocks, meaning, if they hit the buy zone, chances are 80% or better of the time you're going to have a winner. I call those the cows. You milk the cows. And of course with stocks there's other considerations. You want to make sure they have enough volume, so you filter all that out. But I've never really run the wick zone on stocks, or equities, so I really don't know. You'd have to run it and see, and then trade. If that's what you like to trade, find those stocks that it works best on. Maybe I'll have to, I'm thinking, can I even do that with Stock Fetcher? It'd be a little cumbersome, but I think it could be done. So anyway, on the exit side of a trade, once again, you are the biggest impediment. Do you take the trade, take the pips, or do you not take the pips? And when do you take them? So right here, let's say if you took that flip-flop box, you'd be up about 5 pips. And let's say it's moving against you, so you take the 5 pips. And then all of a sudden, you come back and you look, and price is way down here. You quote unquote, they brought out a big pot of shrimp, and there was, another dozen or more shrimp to be had. Because what I've said before is, a lot of times people say you're leaving pips on the table. No, those pips weren't there yet. So you couldn't have taken them. So they had to come out. So you had to wait around for them to bring that pot out. So anyway, fellow traders, we'll probably continue this again because the fastest 15 minutes in trading is over. So remember, just take the pips. Don't be afraid, because you have your stop loss in place, so you know the worst thing that can happen. Because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.